Well, good Monday morning, rural America. How the heck are you doing out there? I'm Marlon Bowling, your tour guide to the ag commodities, and we have some new news that came in from USDA just a moment ago. It's related to sales activity that took place in the grains over the weekend. We call them flash sales, and we got one this morning a little bit different this morning. Let's take a look at what it was. It was a sale of corn, and it was a sale to China. And the amount, 1.084 million tons. Now, here lately, all these sales have been running maybe 100,000, maybe 200,000 at most. They've just kind of been plodding along for quite a while. This is a big batch all at one time. And now this is divided, though. I will point that out. So it says of the total, 676,000 tons of this corn is for old crop, and 408,000 tons is for the new crop, the 2022 and 23 marketing year. So about a little over 60% of it is for immediate delivery. Now that throws a new twist into the market, and one had to wonder if that is why we had an overnight rally in the corn market. Let's take a look, and I'll show you what I'm talking about. On our quotes provided by Bar Chart, May corn was 13 higher this morning at 7.48, almost on the high of the overnight trade. And you had December gaining 9.5 cents at 697.5, and that was almost on the high of the overnight trade. Excuse me. So that was getting really close to that $7 benchmark once again in that new crop December contract there. The nearbys were stronger than the deferred, so that reflects that immediate delivery need. Now on soybeans overnight, May was 16 higher at 15.98 3/4. It did get up to $16 and a quarter of a cent and then fell back away from it just a little bit. November, 16 3/4 higher last night at 14.23.5. Now on to the wheat. In Chicago, we had the May contract 20.5 cents higher this morning at 10.05, and you had July gaining 22 cents in that overnight trade. In the Kansas City market, you had the May gaining 22 3/4 cents at 10.35 3/4, and July 23 1/4 higher. How about the spring wheat in Minneapolis? Well, we had the May contract there, 20 higher at 10.85 1/4, and July was up 19 3/4. So everything's solidly higher this morning. Cotton, July 207 points higher at 133 even per pound. And you had the December new crop contract 125, now 132 points higher. It's at 112 even and on the high of the overnight trade. We're joined by Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. And wow, that was a nice surprise this morning to come in and have a nice big sale of corn like that, Brian.
Yeah, it sure was, Marlon. China coming in, that's about 43 million bushels total. So you did mention it was split between the marketing years of this year and the next year. But, don't be surprised if we see a little bit of selling coming in right off of this news. China's most likely bought these futures at a price level much cheaper than this. And if it's a true hedge and they've made their purchase now in the open market, they're going to sell those futures, sell their hedge this morning. So they're probably going to do that at some higher money and capture some profits on the hedge, and that's how the system works. But so don't be surprised to see a little bit of selling just right off the opening as China puts this back into the futures market. But overall, it's positive for our balance sheets. That takes, like I said, 43 million bushels off of the next 2 years of balance sheets, tighten them up quite a bit, and certainly going to help the market. So we're seeing some decent gains overnight. The corn and the soybeans, the wheat market, all recovering and trading higher here. Crude oil is also moving higher. In fact, it took out Friday's highs, so that will limit any type of margin call type selling, which I think is one thing that plagued the grain markets going home on Friday, as we saw, big sell-off in soybeans. But part of that was crude oil was down fairly hard on Friday, and we saw some spillover type selling or margin call selling weighing on the market. But today we don't have that, as we have, crude oil trying to work its way higher.
Yeah, it said 102.37 on the May contract. This is West Texas Intermediate crude. So that would put it $3.08 higher right now. The May and June both over $3 to the upside. Glad you pointed that out. Brian will be back in a moment, and we'll discuss what this all means to our livestock trade to open up a new trading week when we come back. Well, we're back with you talking with Brian Hoops. He's with Midwest Market Solutions in Springfield, Missouri. So I'm just curious here, Brian, given the fact that we had that new news about the corn market here this morning, we had a pretty good surge in the corn market over the weekend. Does that change your thought process on what the livestock markets might do here this week?
Yeah, you're most likely going to see some selling pressure coming against the feeder cattle market this morning because of the higher corn prices. Probably going to spill over to live cattle as well. Now, we are into the delivery period this afternoon for April futures. Options expired Friday. I don't think you're going to see any deliveries unless the futures really start to sell off. We may start talking about some changes there, but the cash is around that 138 mark. Futures close 138.65. I don't think you're going to see any deliveries at all against that market, and you probably won't see a lot of selling either unless we expect the cash is going to really tank this week. Then you maybe see some pressure, but we're pretty much in line with last week's cash. Show list will be assessed this morning, and trying to determine where the cash outlook is going to be. Right now, I think their calls are mostly steady to start the week for cash, and we've been steady 4 weeks in a row now.
Well, let's take a look at where we wrapped up on Friday then in our futures trade. We start with live cattle, and we were lower across the board on Friday. We had the April contract down 72 cents. Sounds like most of the volume these days is going to be on the June contract, and that was down $1.27 at 135.85. August also down over $1. On the feeder cattle market, when we headed into the weekend, we had the April contract 17 cents higher. But here again, more of your volume is a little further out, and it's interesting where you had the May down 42 cents, but you had August, September, and October all over $1 to the downside. By the way, on the beef cutout values, I wanted to bring that up here just momentarily. On the choice cuts Friday afternoon, USDA said they were down $1.25, but the select cuts were up 18 cents. You know that spread is only $4.62 right now. Now let's take a look at our lean hog prices and how we fared. At the end of trade on Friday, we had the April contract 45 lower, and June, let's go to May, 40 lower there at 113.17, and June was down 17 cents. So a little weaker on the end of the lean hog trade on Friday. Brian, thanks for all the help today. Brian Hoops of Midwest Market Solutions with us here this morning. So Janet, that sets the table for our open here on Monday. We'll get underway at the bottom of the hour.